Hello, today we are talking about cracking the code of DSCR loans and what you must know. So, before we start, hit that like button and subscribe to my channel. In the world of real estate investment, one of the biggest challenges for investors has always been securing financing. Traditional lenders often require a mountain of paperwork, including W-2 forms and extensive proof of income, making it difficult for many individuals to access the capital they need to expand their real estate portfolios. Enter DSCR Loans, a financial tool quietly revolutionizing the real estate investment game, allowing investors to scale quickly without the burden of conventional funding requirements. Understanding DSCR Loans. DSCR, or Debt Service Coverage Ratio, is a critical metric in the world of real estate finance. It measures the ability of a property to generate enough income to cover its debt payments, including principal and interest. In simpler terms, DSCR determines whether a property is generating enough cash flow to service its mortgage. What sets DSCR loans apart from traditional financing options is the flexibility they offer to real estate investors. These loans are structured in a way that allows investors to secure funding without the need to provide W-2 forms or extensive proof of income. Instead, DSCR loans rely primarily on the property's income potential and the investor's ability to generate cash flow. Minimal documentation, maximum potential. One of the most appealing aspects of DSCR loans is the minimal documentation required compared to conventional funding options. While traditional lenders may demand a plethora of financial statements, tax returns, and other documents, DSCR lenders focus on the property itself and the income it can generate. So what documents are needed for a DSCR loan? Typically, lenders will require the following. Rent roll. This document outlines the current and projected rental income for the property. It's a critical component of the DSCR calculation as it helps determine if the property generates sufficient cash flow to cover the loan. Property appraisal. An appraisal estimates the property's current market value. This valuation is crucial for lenders to assess the loan-to-value ratio, LTV, another key factor in DSCR loan approval. Operating statements. These statements detail the property's income and expenses, offering a comprehensive picture of its financial performance. Lenders use this information to calculate the DSCR. Personal credit check. While DSCR loans don't heavily rely on your personal credit, lenders do consider it when determining the loan-to-value, LTV. A higher personal credit score can lead to a more favorable LTV ratio. With these minimal requirements, DSCR loans offer real estate investors a streamlined path to financing, allowing them to seize opportunities quickly without getting bogged down in paperwork. The DSCR calculation. To fully grasp the power of DSCR loans, it's essential to understand how lenders calculate the debt service coverage ratio. The formula is relatively straightforward. DSCR equals net operating income, NOI, / debt service. Net operating income, NOI. This figure represents the property's income after deducting all operating expenses except debt service. It includes rental income, property management fees, and maintenance costs. Debt service. Debt service includes the principal and interest payments on the loan. The resulting DSCR is expressed as a ratio. For example, a DSCR of 1.25 means that the property's income is 125% of the debt service, indicating a healthy margin of safety for the lender. Lenders typically have minimum DSCR requirements, which can vary depending on the type of property and the lender's policies. A higher DSCR is generally more favorable, demonstrating a property's ability to cover its debt obligations comfortably. The advantage of LLC ownership. One of the key benefits of DSCR loans is that they are typically issued in the name of your limited liability company, LLC. This structure provides several advantages for real estate investors. First and foremost, it means that the loan does not report on your personal credit unless you default on the loan. This separation of personal and business credit can be invaluable for investors looking to protect their personal financial standing. Additionally, owning the loan through an LLC offers liability protection, shielding your personal assets from potential lawsuits related to the property. This added layer of security can provide peace of mind for investors, knowing that their personal wealth is not on the line in case of unforeseen legal issues. Consideration of personal credit. While DSCR loans are less reliant on personal credit than traditional mortgages, it's essential to understand that lenders still consider your creditworthiness. As mentioned earlier, your individual credit can impact the loan-to-value, LTV, Ratio, which can affect the terms and conditions of the loan. A higher personal credit score can lead to a more favorable LTV ratio, which in turn can result in better loan terms, such as lower interest rates or higher loan amounts. Therefore, it's wise for real estate investors to maintain and improve their personal credit to maximize the benefits of DSCR loans. Exploring the possibilities, DSCR loans have become a game changer for real estate investors seeking efficient financing options. With minimal documentation requirements, a focus on property income, and the advantages of LSC ownership, these loans empower investors to scale their real estate portfolios quickly and efficiently. If you're intrigued by the potential of DSCR loans and want to explore how they can work for your real estate investment goals, don't hesitate to reach out to us. Our team is here to provide you with expert guidance and information on our lending products tailored to your needs. In conclusion, cracking the code of DSCR loans unlocks a world of opportunities for real estate investors. By understanding how DSCR is calculated, leveraging the advantages of LSC ownership, and considering personal credit, investors can harness the power of DSCR loans to fuel their property acquisitions and achieve their financial goals. The era of flexible and efficient real estate financing has arrived, and it's time for investors to make the most of it. What do you think about our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.